Today, I want to walk you through three very different businesses that could make for an excellent combination if you're considering where to put $1,000 to work right now. These companies represent a healthy balance of stability, innovation, and future growth potential. Recently, Walmart's stock declined after its fiscal Q2 results. The stock dropped by more than 6% because earnings came in at 68 cents per share, falling short of analyst expectations of 76 cents. The main reason behind this miss was tariffs, which added cost pressures to the company's operations. Even though the short-term reaction was negative, Walmart's stock has already bounced back and recovered most of the decline. This is because investors looked past the earnings miss and realized that the company's revenue growth was still very strong. Walmart reported top-line growth of 4.8%, which improved to 5.6% when adjusted for currency changes, reaching revenue of $177.4 billion. This actually surpassed analyst expectations of $176.2 billion. On top of that, the company raised its sales and earnings outlook for the full year, showing that management remains confident in its ability to grow moving forward. One area of particular interest for Walmart is its advertising business. While this part of the business is still small compared to the company's total revenue, it is growing quickly and is very profitable compared to the core retail business, which typically operates with low margins. Advertising revenue generated through Walmart.com and its Vizio smart television platform grew 46% year over year, including a 31% increase in the United States alone. Last year, Walmart reported that its global advertising business reached $4.4 billion, which represented less than 1% of total sales. Even though that might seem small, the fact that advertising is such a high-margin business makes it very valuable for shareholders. It also shows that Walmart understands how important it is to build an ecosystem where its brand and customer base can be monetized in many different ways. Another growth engine for Walmart is e-commerce. Walmart's global e-commerce revenue rose 25% year over year in Q2, supported by in-store fulfillment services and local pickup and delivery options. This demonstrates how Walmart is successfully combining its massive physical presence with its online capabilities, creating a hybrid shopping experience that makes it an essential lifestyle brand for consumers. Taken together, these growth drivers are transforming Walmart from a traditional retailer into a recurring revenue powerhouse that can compete with other lifestyle and technology-driven companies. Unlike Walmart, which is a household name, Rocket Lab is a company many people have never heard of. However, this company plays a critical role in the future of space exploration and satellite deployment. Rocket Lab focuses on launching small satellites into orbit using its reusable rocket called Electron. Electron can carry up to 660 pounds into low Earth orbit, and so far, Rocket Lab has successfully completed 70 launches, placing a total of 238 satellites into space. Why is this important? The space industry is evolving rapidly, and demand for small satellite launches is growing quickly. Modern communication systems, including satellite broadband and mobile phone networks, increasingly rely on smaller and lighter satellites. At the same time, companies and governments need cost-effective ways to launch them. Rocket Lab's Electron rocket offers exactly that solution, with per-launch costs averaging between $7 million and $8 million. Global Markets Insights predicts that the global small launch vehicle market will expand at an average annual rate of over 12% through the year 2034. This creates a long runway for growth in Rocket Lab's niche. What makes Rocket Lab even more exciting is its work on a much larger rocket called Neutron. Unlike Electron, which is limited to smaller payloads, Neutron will be able to carry up to 14 tons of cargo, making it suitable for medium lift missions that could support moon landings and even longer-term space exploration. While the company has not set an exact launch date yet, Rocket Lab has stated that it expects Neutron's first launch before the end of this year. The launch will take place from a new Virginia launch pad that was officially unveiled just last month. This represents a major milestone for the company and could open up many new opportunities in space infrastructure and exploration. It is important to point out, however, that Rocket Lab is still a relatively small company with a market value of around $20 billion. The company is not yet profitable, which makes its stock more volatile and sensitive to headlines. Investors should be prepared for significant ups and downs if they decide to invest in this company. With that said, the long-term potential is huge, and Rocket Lab could become a key player in the growing space economy. Like Rocket Lab, ARM is not a company that most people talk about every day, but it plays a vital role in the technology world. ARM designs computer processors, but it does not manufacture them. Instead, it licenses its processor designs to other technology companies such as Nvidia, Intel, Apple, and even Amazon. These companies then use ARM's designs to create the chips that power everything from smartphones to cloud computing servers. ARM generated about $4 billion in revenue last year, and while that number is smaller compared to giant technology firms, the company enjoys consistently high margins because its licensing model requires lower costs. ARM's main advantage lies in the efficiency of its processor designs. Its processors consume much less electricity than many rival chips. For example, Amazon Web Services developed its Graviton cloud processor using ARM's technology. Graviton processors are about 60% more power efficient than other chips, which translates into a 20% reduction in costs for customers. Apple also chose to use ARM-designed chips in its iPhones because they allow artificial intelligence features to run directly on the device without quickly draining the battery. Perhaps the biggest growth opportunity for ARM is in data centers, which use enormous amounts of electricity. Google recently introduced its own ARM-based central processing unit called Axion for cloud customers. ARM expects its share of the data center processor market to increase from 15% last year to 50% by the end of this year. Analysts believe this will mark the start of a significant growth cycle. Forecasts suggest that ARM's revenue will grow by more than 20% annually for at least the next 3 years, and profits are expected to nearly triple in the same period. This strong growth outlook helps explain why the stock currently trades at what looks like a high valuation. When you put these three companies together, you can see why they make such a powerful combination. Walmart offers stability, strong recurring revenue, and a growing technology-focused business model. Rocket Lab provides exposure to the rapidly expanding space industry and has the potential to grow significantly with its upcoming Neutron rocket. ARM Holdings is at the center of the technology world, delivering efficient processors that are becoming increasingly important in everything from smartphones to data centers. Together, these companies balance each other out. Walmart provides the steady foundation, Rocket Lab offers high risk and high reward potential, and ARM brings consistent growth opportunities in technology. This mix of stability, innovation, and future growth creates a well-rounded package for investors who are looking to diversify their portfolio with $1,000 or any other amount they are ready to invest right now. In the end, Walmart, Rocket Lab, and ARM Holdings represent three very different companies that together create a balanced mix of stability, innovation, and growth potential. Walmart is evolving beyond retail through strong e-commerce and advertising revenue growth, turning into a lifestyle and recurring revenue powerhouse. Rocket Lab specializes in cost-effective small satellite launches with its Electron rocket and is preparing to debut its larger Neutron rocket, which could play a key role in future space missions. ARM Holdings designs energy-efficient processors that power everything from iPhones to data centers, and it is set to grow rapidly as companies like Amazon, Apple, and Google expand their use of its technology. Each company has unique strengths, and when combined, they offer investors a well-rounded opportunity to invest $1,000 into both stability and long-term growth. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.